Good evening. This is the Eye of the Storm podcast for the NASDAQ 100 and the S&P 500 for Sunday, September 18th, 2022. I'm going to start here on the weekly chart. As we begin the Globex session, the markets are a little bit down to a little bit up. So I want to go over the big picture, and I'm going to start here on the weekly. I am still now fairly satisfied with that we have completed primary wave A down, and that primary wave B up is also complete, which puts us in a primary C wave decline. What is inside that primary C wave are going to be 5 waves of intermediate degree. And the primary degree on this chart are labeled in green. The intermediate degree are labeled in yellow. So the yellow, we show intermediate wave 1 and 2 complete. Now I want to pull this into and make it a little bit more technical. So I'm going to leave the Elliott account alone for right now. And I'm going to bring in the moving averages. And in the moving averages, we basically back on last Tuesday, we went shooting above the weekly 20 and then turned and immediately rejected that 20, the crossing of the 20, and went back below it and then continued to drop, finishing the week well below it after having tested the weekly 200 EMA. Now, again, that at the time and still right now is sitting at, let me just get right to it, about 11,840 to 50. And the market got down on Friday. The low was 11,778. So broke below, but immediately, and with some gusto, so to speak, retook that level and closed well above it. So it managed to rally back above and closed at 11,960. Now the market did kind of roll in that total last hour on Friday, which is pretty much given to people just squaring things up for the session, giving also an extra hour to a lot of the funds that have redemptions and new money coming in during that period, that window as well. So there is that extra hour. Now, taking all of that into consideration and the moving averages, it would appear that the momentum has turned. We have, on the weekly basis, relative strength, we have still enough room, kind of went flat, even with a pretty serious decline. The fact that we rallied back up, flatten that out a little bit. Now, breaking that suggests that we may have, on an Elliott basis, reached probably minor wave 1 of that intermediate wave 3. Now I'm going to stop there because what I want to start adding to this is just additional technical. So we're building a picture as to what should happen accordingly to our initial Elliott count that we're working here. So if all of this holds true, and right now, there's no reason to doubt it, the market is beginning and getting to a point where it should really begin to crack a little bit more seriously. And the reason being is that we are in a third wave. Now, what would that suggest? That would suggest that we're going to start to come down. We're going to break below the weekly first EMA, clear it and keep going, and then test and break the 200 period SMA. And that right now is at 11,162. So that would take care of basically breaking below 11,068, which I am looking for this particular section. Number one, I'm looking for the primary C wave, which is what all this is a part of, to definitively break 11,068 and keep on going. I would expect that primary C wave will take, again, now I'm looking at the weekly chart, so bear with me, that the primary C wave should take out that low at 11,068, but it should effectively go below 10,000 before all is said and done. That's on a weekly chart basis. It's on a primary C wave, which is a much larger move. Now, it's not all going to happen tomorrow. It's not all going to happen next week. I should take that back. It all could, but it's not something I'm expecting unless the Fed truly does something astonishing on Wednesdays, when we'll find out. The Fed meeting starts on Tuesday. We get the results of that meeting on Wednesday. So there will be a lot of posturing, and we'll see basically what the market does or does not want to do, what it really is going to choose to focus on in terms of posturing against, what the possibilities are for the Fed movement to come in greater than expected or less than expected. So that's out there. Now, back to the market. So what I can now add to this, again, if this is a third wave down and where we now figure that this has to go, I want to put some additional parameters around a weekly picture. So that now we're going to start to break it down to where we are now coming in to tomorrow's session. And I didn't want that one. I wanted to put up. Let me remove that, change this, put up extensions. So once again, I'm putting in from the all-time high to the low of primary A to the top of primary B, and this is going to give us the primary C wave, the expectations or the parameters or the Fibonacci support levels for the primary C wave. Again, weekly chart, longer term. And we can see that if we're here, and this is intermediate 1, intermediate 2, we're getting ready to drop into intermediate wave 3 of a primary C. Again, just to take a very quick review, under Elliott, third waves within an impulse move, which is just labeled 1, 2, 3, 4, 5, that the third wave is most often the longest and the strongest wave out of waves 1, 3, and 5. So here we are. And soon we may be in that minor 3 of intermediate 3. So again, we can continue to subdivide, but we're now beginning to, which would be expected. I had discussed last week the potential and the strong probability that we did have continued downside, but that it would stop, we would turn, we would rally, and then we would be marking a minor degree 1 and then a minor degree 2. And then roll off. Now, this all could take place between today's Globex session, tomorrow's session, and most of Tuesday's session. That's when we get the next news that could upset the apple cart or support the apple cart to continue to roll uphill. And that's a key word that I just said there, continue to roll uphill. If we're definitively in a minor wave 2 correction, what comes next, I cannot put my finger in the air and say that'll be the reason. That's the storm that'll cause it. I don't know. But what I do know is that what would be typical is for a larger third wave to kick in and continue to go. Everything's lined up. We do have potential, fundamental, and just technical reasons for the market to continue to roll over. In that vein, we have expectations for a primary C wave to, at a minimum, come down to 8,041.42. And that would be where the primary C wave is equal in length to the primary A wave. Again, that's at 8,041.75. That's the area. Now, often the C waves are going to come in greater in length than the A wave and usually start to pull in between 1.236, 1.382, and 1.618 on that kind of extreme level, an extreme push towards the end. Again, even off of the weekly chart, I am looking for this sequence to come in somewhere within the price range of the previous fourth wave, which is going to be that primary fourth wave. And on that level, That is 6,617 approximately. Actually, 6,629, I'll call it. Now, I don't necessarily think, I think that could be a bottom, but again, it's going to be dependent on where we are and what that structure looks like when we start approaching all this. We're looking to count 5 waves of intermediate degree. Once that's countable and truly showing signs of being complete, it more than likely will be between B under 8,042 and somewhere within this range is where my ultimate goal sits. To here, we'd be breaking that low. So it should be within here. And again, that would be the ultimate push would be all the way down to 45.20. And that's on a weekly chart for the primary C wave. And that forms the cycle wave A. Again, corrective phase starts up here. It is an supercycle wave 4 correction. Within that supercycle wave 4 correction, it's going to be an ABC of cycle degree. And then we just continue to break it down. What's going to be in the A wave of cycle A? It's going to be an ABC of primary degree. What's going to be in the A wave of the primary degree? An ABC of intermediate degree. So they're all building blocks and they're going to continue to be building blocks. We're going to put in the C wave for primary wave C. That'll give us that'll give us cycle wave A. We all have a cycle wave B rally and then an additional cycle degree C wave. And again, if you've been listening to my updates, I talk a lot about if we're looking for the C wave here. And then after when this is complete, looking for a B wave. Here is the intermediate degree B wave. Here's the primary degree B wave. Difference about 2.5 times the size. Now moving it out to a cycle wave A and then a cycle wave B. So the cycle B wave should be 1.5, 2.5 times as large as this particular wave to the upside. And it'll be an ABC up, an ABC of primary degree up. So they don't happen overnight. They are rolling out pretty quickly, but you can see these are months. This is a weekly chart, and that high is November of 2021. And we're getting ready to finish up September. So we are 10 months in, and that's where we are. So again, on a cycle basis, we are now driving a little bit stronger in a down cycle of a cycle. So we're in the down leg of that cycle that's going into a low. I believe that low is due end of September into October, possibly even a little bit later. I'd go double check because the timing can change. Now, so we have all that going into play. Now, I want to actually, I'm going to leave that on for the time being, go down to the daily chart. Now, we're going to start pulling this down so we can look inside. We're okay, or I'm okay that this is primary A, primary B. We're in a primary C wave that consists of 5 waves of intermediate degree, intermediate 1, intermediate 2. We're in that third, intermediate third. And we're pretty much continue to be lined up for the down wave. The market did not, at least on this particular leg, did not go up and challenge the 200 on the daily. The daily 200, they remain pretty safe and continue to point lower. We do see that the 20 during this particular drop last Tuesday pulled and dropped below the 50s. Then these peaked, the 4 and the 8, and then they both turned lower. This is the daily that's facing and turning and driving fairly strong lower. Now, so on a daily basis, This was the very strong move that we saw on Tuesday, and I had at that time had discussed that it could be the completion point for minor one, but we still needed to let this small little corrective phase roll out so we could take a look, and we did. And then again, this was Thursday. We had a pretty strong down day. Friday, we went down further, but the rally back in the close lent us to, or led me to kind of look at it like we likely still might be finishing the minor one, and now we're going to be in a very small minor two. Once again, the power of the selling could really dictate as to what levels this wave two, if it is indeed a wave two, could come in. First thing I want to add up, though, is the Fibonacci extensions for the wave three. So now we can add those. Again, that's just building the downside case for right now. And same story, we're looking for a minor wave three. No, exactly, excuse me, intermediate wave three. We'd be looking for at least down. Remember, these are the total C wave. This would be for the intermediate third wave. Intermediate third wave should, number one, take out, which it already has, that, so we know that we're kind of into that, the larger drop, the intermediate wave three, and we basically have rallied up. So we're looking for the entire thing to come down more than likely. So here would be intermediate wave one would equal intermediate wave three at 11,167.68. Now that we have broken below 11,000, that low was 21. We broke below 21. We got all the way down to 11,778. So that was decent, but then we rallied back up and did continue to trade. In fact, we closed up above 11,021. Now we're back below and heading, kind of going to sit below it for right now to see what the market wants to do. In any case, I'm marking this as a minor wave one. This would be a minor wave two. So now what I want to do is first we put in the support that we have coming off. Again, 618 support is 11,862. That's now going to be still in the picture. We've dropped below it. Now it went back above it, so it's still there. And we'll see what kind of support, if any, it provides. And then we have 11,700, I'm going to call it. And then upper here, these support lines really may be coming into play, but they're related to the primary C wave. And now we're counting the other one. So once we start to break below 11,700, I think that opens us up to really kind of accelerate a little bit as we head down to that 11,068. So our price support begins at 11,444, and then we have some more at 11,315 price support. And if anything, it's just where you could take a breath, you look around, see what's going on, and realize we still have more to go to the downside. That ultimately should be broken again in a third wave. But before that takes place, where ultimately I would look for, again, the intermediate third wave to bring us down to 10,043 or possibly a little bit lower. But 10,043 sits pretty well with me since we've got that larger support for the primary C down at 8,041. So a break down towards 10,000 would fit the picture quite nicely. And then we get another little small, but this would be intermediate three, we get intermediate four bounce, and then we get intermediate fifth wave. And that's the one that takes us all the way down to here. And that basically, folks, really takes us already into, I think, the end of September, October. And it sets the stage. So that's on the daily chart. Now I want to bring this down again and start to look even closer to more on our day-to-day. Again, minor wave one, it's going to be way over here actually, but I'll leave it right there. Now I'm going to take this, oh, come on. Yikes. I'm going to take this guy off. So all we basically have on, I'm going to take this guy off. So I took the wrong one off. But now I'm going to go on what should this wave 2 look like, right? What I need to do is go back to the retracements. And on the retracements, we can see that even a minimal retracement for a wave 2 comes in at 12. Well, let me just kind of open that up. There you go, 12,063, 64. Then we have 12,240 for wave 2 absolute minimum. That's what I would think. But in that area, we also have the 200, the hourly 200s. But here at the lower level, we have the hourly 50s. And now having trouble hanging on and above the hourly 20 and the 8. So what I was going to start the conversation before on is like, if the market can't hold and do this, we can put a 1 there. And if this comes in at a 2, man, we're talking weakness. We're talking some serious weakness in the market. Now, whether it truly could be a continuation of just this -1, I could, if this is 1, this is 2, this is 3, this is 4, we do a 5, we bring it down, we come in below, we put a low below 11,778, maybe down to that 700. And then rally in a wave 2. So again, if this low holds and we turn and we start to rally, which we can, then it's going to be a -2. Otherwise, we're likely still going to be in that first minor wave down. Again, not really visible and showable on the weekly chart or the daily chart. We have to come down to the hourly chart and look at the internals. Now we're breaking it, so we're trading intraday. What can the market do intraday? On the weekly, basically just contribute to what the picture looks like. If it's an inside day, it's going to look like nothing. But meanwhile, it could look like this, which provides a lot of trading. Now, so we need to allow for tomorrow as we start our week. It may be slow, it may be almost dysfunctional to think that we're really going to rally a whole lot in the face of what the Fed's action might be. And that's based on last Tuesday. Let's not forget, last Tuesday's CPI number shocked the market. Well, that was the shock that produces the big ass drop. So we're going to go look for what's going to do again. So weakness, it could still end up to rally, maybe gets up to here, and we still can call it a wave 2, to be honest with you, because of the structure and the overall weakness in the market. Minimally, we're kind of looking like it should come back up into here. Maybe even rally up to 12,382. But right now, the market's going to have a lot of trouble doing that after that, and this getting nowhere. This was the day after, a couple of days after. This was coming in to the expiration. So, Tuesday, Wednesday, Thursday, Friday, not pretty. Okay, so that's the picture kind of going forward in the NASDAQ. The S&P, it really is going to be the same, but we're just going to go real quickly over to it so that we can show you. Here's intermediate 1, intermediate wave 2, so we're still coming off. It's a little bit cleaner in terms of this is likely minor 1, but it's still same deal. We got to rally. So if this is 1, I got to make this is kind of not real pretty. You see what it does? All of this noise. What I can do often, like I've said before, I will go down and put the line chart on, because it could be 1. That completes 1 of minor 1. Or 2 or 3 of minor 1, and we get a 4, and then we're doing the 5. So we're going to leave that in still in progress, even though those produce a little bit of a headache and a little bit of, see, what is all that noise? So I'm going to leave it as all a part of this first minor wave of intermediate wave 3. And that could end here. But if it really had to go beyond, I'm not sure exactly how I would count it, other than 1 and then a 2 and then a 1, 2, and all this is part of the 3. And then this is the 3 3 of this little internal 3 of minor 1. So the internal 4th of minor 1. Put in a new low. 38.50. Nicely, we're back below 38.83. We're just above it right now from how the market is trading. But we'll continue to move lower. Upside. Let's take a look if this indeed marked minor wave 1. Yeah, that's a good one. I'm just going to put it right there. Right, come on. 39.53, 63. And so we have, it's not even again, right? So we have the 50s at 39.17. We have fib resistance at 39.26. Then we have the 200s, the moving average, at approximately 39.80. But we have fib resistance at 39.71. Both very contentious and both up in the list to control upside before we get the Fed results. So rallies, I think, will be contained. And then continuations to the downside, we need to keep in mind. Let me go back out to the 4-hour at least. Yes, I got to put these in for the minor. That's not going to work. And we're going to go back down to those. And let me go back down to the hourly. Yeah, I can get it here. No, I can't. I'm looking to do it from over there. Sorry about that. Daily's going to make my life easier. So we're going to go there, there, to there. And now I can go back down to the hourly. Well, actually, I can just stay here. So we're looking at the wave 3, and the wave 3, if the market just turns from here and shows a lot of weakness, wave 3, we can go, 38.61, but we've already been below. Our low is 53, which drives us down to 38.26. If indeed this minor 1 has still got some ways to go. If the weakness in the market overpowers the weakness to rally, and we break this 38.26, you see it drops pretty quickly, almost 100 points. And you can see that it all is very fitting. We don't really have much levels here before we hit 37.31. Ultimately, yes, I would be looking for primary wave C to easily break below 36.39, which is the existing low from June. And that would give additional major support that it is this intermediate third wave. And then again, stronger support that it is a primary C wave driving lower. And then we have those numbers in here as well as to where the market can ultimately go in an intermediate third wave. And we can also throw in where the primary can go. Primary, again, if I drop out to the weekly chart, it really does roll around right in here. That's the previous fourth wave, 2167, I'm going to call it. And we have truly, I can throw them up here real quick. Oop. Right there. Thank you. Go right there. Thank you. You can see 24. So basically, we have 100 at 31.52. That would be absolute minimum, absolute minimum. And it happens to just be where the intermediate wave 2 ends. There's not really a fib relationship that way, but it's a wave 2 low versus a wave 4 low. A lot of people could accept it that aren't necessarily attaching an Elliott number to it. So on an Elliott basis, I'm looking for it to get inside that 2 as well, inside this level. So it could 31.58. And then if that's the case, and that's a primary, if that's the case, and primary wave 5 ends here, should be a very strong B wave. And it could look totally different. My outside self tells me that that may provide us pretty strong pause and maybe a little pop, but ultimately I'd be looking for it to come in between, closer to like 28, 2900, and then start to put in that next rally phase, which will come in terms under the labeling of a cycle degree B wave. So because what we're doing now and putting in a primary ABC is that we're completing the cycle wave A. Remember, all the way up, as I described it on the NASDAQ, same deal here in the S&P, a super cycle fourth wave. What's going to be corrective inside that super cycle fourth wave? We're going to get an ABC structure to the downside on a cycle degree. So we're just break it down. What's inside that cycle wave A? Well, it's either going to be 5 waves of primary, which it's not. So they all operate in the same degree. And since it didn't begin that way, it's not going to follow through. So we're looking for ABC on primary degree. And then breaking that down in ABC on intermediate degree. Those are all for the A waves. Those are all for the A waves. So no different. It's the same pattern all the way back down. And so there's no reason. So we're looking for a cycle degree A wave. And then we're going to get a B wave rally. And the B wave rally should be pretty sweet in terms of being long and riding it up and not paying attention to what's happening in the real world. So we'll see. I'm going to leave it all there. So for tomorrow on the S&P, we can look in case we do start to break. We kind of got an idea. 38.26 would be first on my list. A break there opens it up pretty quickly to 37.31. We got 37.42 down to 37.31. Upside, I think, is going to be very limited to the moving averages right now, and that's the 50, the hourly 50 and the hourly 200, SMA and EMA. And we have the Fed meeting on Wednesday. That's it for right now. Our next update will be on Monday, September the 19th.